day traders, welcome back to another Fides Flows video. Today we are doing the daily market brief for Monday the 27th of October 2025. In these Fides Flows videos, I do a deep dive into the price actions and fundamentals behind gold, Nas100 and Us30, giving you a clear roadmap for the trading day ahead. Using higher time frame technical analysis, I identify key zones, momentum shifts, and trend structures, and then combine that with real-time macroeconomic drivers like interest rates, inflation data, and market sentiment. So whether you're a swing trader or day trader, this breakdown helps you understand what's really moving these markets and where high probability setups might form. Just some key points to note for the analysis ahead. Regarding gold, we see a double top formation at 4,380. Markets then saw a massive drop towards the 4,000 pivot level, and we are now seeing markets consolidating between the pivot levels of 4,050 and 4,150. Nas100 currently creating new all-time highs at 25,703. We saw the market gap up at the week's open, and we are still currently seeing a bullish impulse move to the upside with no foreseeable correction taking place just yet. In regards to US30 also creating new all-time highs at 47,600. We did note a triple bottom formation at 45,500 before the injection of the bullish momentum, and then the break above the 46,675 pivot level obviously added that extra layer of bullish momentum which kept pushing the markets higher. In terms of fundamentals, the focus in the market analysis or the news outlets this week has been on the US government shutdown as well as the easing tensions regarding the US-China tariffs. And with that, let's hop into our analysis. Starting with gold. Gold currently trading at 4,040 with Asian highs and lows currently at 4,054 and 4,097 respectively. Price moving consolidated during the Asian session this morning. Market has been bearish for the past few days after that massive double top formation that we did note right here. After that double top formation with the peak being on the 20th, which was Monday last week, we saw a massive bullish move in the market which stretched out over 2 days, eventually testing just coming close to the 4,000 level before consolidating in the current range, which we can see now, which is between 4,050 and 4,150, creating a bit of a bull bear trap as we can see here, but we'll get into this a little bit later. Let's move on to the 4-hour time frame quickly and see what we can observe there. On the 4-hour time frame, price is looking a lot more bearish now, as bearish price action structure is currently testing the major support trend line that we have drawn here. This is a validated trend line and price is currently testing it, but that being said, price is trading below the 2150 SMA region. We do not see a bearish cross on this particular time frame just yet in regards to the SMAs, but that being said, it is clear that the confluence are getting tighter and tighter, and we will have to see some sort of reaction soon. In terms of RSI, we can see that the RSI is currently below the 45 level, which adds to the bearish confluences that we are noting. As I mentioned, we didn't see a bearish cross just yet on the SMA, and price is consolidating, so we are just waiting a reaction from this particular point. But let's drop into the 1-hour time frame and see what we can observe. On the 1-hour time frame, we can see this consolidation playing out a lot more clearly. Price is clearly moving in a consolidation between the pivot levels of 4,050 and 4,150, and we are seeing a bearish momentum currently at play since the opening of the market this morning. Price has dropped below the 2150 SMA region, and we have observed a bearish cross which took place on Tuesday, the 21st of October, and price has continued to move bearish since then. Every time the market has moved into the 21 SMA region off this bearish cross, we have seen a downside move here, a bearish move from that particular level. But again, the support at 4,050 has held strong and continues to keep the bears at bay. Price is currently trading below the 200-day SMA as well, which maintains its bullish structure. But that being said, price has the potential to move back above, or we could be seeing bearish crosses off the 200 SMA taking place shortly. It does depend on whether this 4,050 pivot level actually holds, or if we're going to see a further move down. In terms of the RSI, we are seeing that the RSI is below 45, which adds to the bearish confluences column. So in terms of the overall analysis, we are seeing clear bearish tones in the gold market currently, which can be attributed to traders closing long positions and collecting liquidity before continuing the trend to the upside. That being said, from a fundamental perspective, economic tensions seems to be easing during this time in regards to the tariff talks with China, potential ceasefires in the ongoing war, and strength stepping back into the USD as the government shutdown seems to be coming to a conclusion. The gold market is in a bull bear trap at the moment, and the reason why I say that is we have multiple confluences, which does suggest that the market can push higher from its current position. The bullish confluences being the collection of liquidity that we are seeing from this massive bearish move, the bullish support trend line, as well as the 4,000 pivot level, which price is still maintaining price action above. We also have the 200 SMA strength that is stepping in here. Now, in terms of the bearish confluences, we are seeing massive bearish momentum. We have the bearish cross of the 2150 SMA here on the 1 hour time frame. And overall, we are seeing more bearish more bearish structure here than we are seeing bullish structure. But only time will tell. We also have bearish RSI currently at play. So only time will tell. We have to see a break of this consolidation. We have to see if 4,000 holds, or if we're going to see a break back above the SMAs and the 4,150 pivot level before we actually look to take some sort of position in this particular market. Let's move on to Nas100 next. Nas100 currently trading at 25,703 and is moving bullish again after a retracement from the 25,200 level. Yes. So markets tapped the 25,200 level, moved bearish during the Wednesday session, creating a bit of a double bottom formation here on the 200 SMA and the pivot level at 24,870. This double bottom formation right here, coupled with the massive bullish candle on Thursday at the open of the New York session, created a situation where there was a massive injection of bullish momentum. This bullish momentum then carried across into Friday, breaking above the major pivot level at 25,200, which was validated multiple times in the past. And seeing this break off the pivot level, we can see that the markets continue to move higher. And with the massive gap up we saw at the market open this morning, price is continuing this impulse move to the upside. Now, that being said, I just want to quickly take a look at the 4-hour time frame, and noting that the price is moving in a bullish channel at the moment. It is at all-time highs, but that being said, the only structure I have from this chart as the market continues creating all-time highs is this top end of the bullish channel. So when you see our price reacts there before we see some sort of retracement, there does need to be some sort of correction first before I actually take a trade. We can see a market created a triple bottom formation before push to the upside. So it is clear that the impulse move has a lot of liquidity and momentum behind it as it stands. And I would first need to see some sort of retracement before I take a trade. But yeah, on the 4-hour time frame, price moving bullish, as I've mentioned, above the 2150 SMA and overextended levels of the RSI. So it is clear that a retracement is imminent. On the 1-hour time frame, very much similar circumstances, price trading above the 2150 SMA and the overextended levels of the RSI above 70. So there's not much for me to do here except wait for the retracement. My best analysis would be that once retracement takes place, we fill this gap that has been created here, and we potentially retest all the way back to 25,200 as it was a major resistance level in the past, and we could see some sort of break and retest scenario taking place here, as we've yet to see a push from that particular level. So that is the analysis for US Tech or Nas100. Let's move on to US30. US30, very much seeing similar signs to Nas100. Currently priced at new all-time highs at 47,527 and is showing bullish movements like that of US Tech. The market is moving bullish again after the break above the 46,675 pivot level on Thursday during the New York session. So yeah, right here, price broke above, and then with that bullish injection of momentum, price continued to push higher throughout Friday. During the New York session, we saw a massive gap up, and then of course at the market open this morning, we saw a strong push to the upside. Take a look at the 4-hour. We're also seeing a bullish channel that has been created here with the all-time highs. The best I can hope for is to see that price tests this bullish channel before seeing a retracement. Now, that retracement, if it's deep enough, we could see a retest at the 46,680 pivot level. But that being said, we have to wait for the impulse move to end and for the correction to actually begin. On the 4-hour time frame, price is trading bullish above the 2150 SMA region, and we are overextended on the RSI at the moment above 70. On the 1-hour time frame, price trading bullish above the 2150 SMA. We are seeing signs of consolidation between the Asian highs and lows at 47,473 and 47,600 respectively. Price currently moving in that particular region with very low steam, so it is clear that the bullish steam might have dissipated. We could see a correction soon towards the trend line right here before a push back to that top end of the bullish channel that was noted on the 4-hour time frame. Market directionality is certainly bullish, but the market is overextended due to the massive move seen on Friday and this morning. Thus, I would need to see a deeper retracement before looking long, potentially targeting the 47,200 break and retest zone, or a deeper retracement back to the pivot level at 46,675. Taking a look at the VIX is back in the risk-on territory, trading at 15.66 after closing the week at 16.45. The VIX is extremely volatile at the moment, in line with the economic climate we are seeing regarding the US government shutdown, wars in Ukraine and Russia, and the tariff situation with China, all fueling the speculative nature of the market and in turn creating volatility across all markets, resulting in the choppy nature we've observed in indices over the past 2 weeks. That being said, this massive correction we saw from risk neutral position down back into risk on has obviously fueled the new all-time highs we are seeing in the indices, as well as the bearish play that we saw in gold during the past 2 weeks. So yeah, I mean, VIX currently back in risk on, so clearly that's good for indices, not so good for gold, but we'll obviously have to follow our market analysis and use this as a factor of confluence in that analysis. Okay, taking a look at Forex Factory for the week ahead. Let's see what news releases we have. So for Monday, we don't really have anything, so it's technical trading day. Same for Tuesday. We have consumer confidence release, but it's orange folder, so it shouldn't be heavy impact. Wednesday, we do have a lot of stuff being released, especially for Australia, Canada, and the US at 8 p.m. regarding FOMC statement and federal fund rates. So that should be an interesting one. Thursday, we have yen news as well as USD news, but this is tentative depending on the US economic shutdown. We also have euro news regarding main refinancing rate, monetary policy statement, etc. And then Friday, USD, so that's Halloween. We have employment cost index and core PCE. Yeah, government shutdown has been going on for nearly a month now. It's actually crazy. So waiting to see when that ends and how it impacts the financial market. I think there's going to be a huge snapback of the elastic band once the government actually opens up again and we back to our regularly scheduled programming. But with that, that is the analysis for today. I hope that you enjoyed it. Please like and subscribe and let me know what you'd like to see more of moving forward. This is not financial advice, but my personal opinion on the current state of the markets. Before taking any positions in the markets, make sure to do your own research first. Happy hunting, traders, and I will catch you in the next video. Cheers.